the stock market. We showed him all the major indices 15 minutes in the future. And where it could close that night.
Humanity has always tried to find the sharpest edge. We do this in business and we even do it in cooking. It's our base instinct to adapt to our environment. In recent past, our edge was the sharing of information, which we should thank the internet for. But like all edges, they eventually get blunt. In today's extremely competitive digital world, everybody has access to the same information, and now it is absolutely necessary to use that information and all the tools available to remain relevant. Investment managers struggle to find ever-shrinking alpha, scientists race to discover the next breakthrough, and big tech companies analyze every single speck of data to create ever more efficient products. The point is, using valuable information and data is the new normal, and it's time to find a new edge. Vectorspace AI could be that edge. Vectorspace AI combines both AI and blockchain to unlock hidden insights from data. These insights could be taking a profitable position on trades before others, or discovering a new life-extending protein. So, join me in this video where we will go through everything you need to know about Vectorspace AI. We will go through what it is in simple words and also how good of an investment it is. At the end, we will give it a rating. But before I start, a little housekeeping. I've taken a bit of a hiatus away from YouTube due to personal reasons, so I'm sorry that I couldn't make these videos as regular as I would have liked to. I'm going to be making some changes to the video format so they are more regular, but still keep quality. And by the way, if you like what I do, hit the like button and subscribe. It really helps the channel out, and I think more than 80% of you aren't actually subscribed, but still watching my content. So yeah, if you could just hit the like button and subscribed, it would really help me out. Thank you very much and enjoy the rest of the video. Standard disclaimer, this video is for educational purposes only. This is not financial advice, and please do your own research and consult a professional before looking to make any investment. They say that data is the new oil. We've heard that phrase a million times, and we also hear that more companies today are using big data to create products and services more efficiently. But to do this, those companies actually need to get that data first. Then they need to make sure that data is cleaned and organized into a usable form. We call these datasets. Creating these datasets is what Vectorspace AI does. It takes raw unstructured data from various trusted sources such as PubMed, the National Library of Medicine, and more, and processes it into structured datasets. You can think of Vectorspace kind of like a digital oil refinery. If data is crude oil, then datasets are refined gasoline. But what makes Vectorspace valuable? Essentially anybody with a computer can refine data into datasets, right? Well, Vectorspace has a special sauce nobody else has. Vectorspace combines AI, specifically natural language understanding, and a blockchain. Let's take a look at the AI component first. In AI, there is something called natural language understanding. It allows computers to break down text and then actually read and understand the meaning of the text. Pretty cool, right? Vectorspace achieves this by using various language models and their own patented algorithms. The algorithms are able to highlight the known relationships between words. But what is really cool is that it also highlights hidden relationships between words under a specific context. This makes finding patterns that you may not even be aware of easier. Let me take you through an example. The Evergrande Group default was quite a significant event recently. On 31st August 2021, the Chinese property developer announced a possible default on $300 billion worth of debt. A default of this size presented a risk to global markets, and investors began pulling back their investments. This eventually resulted in a gradual decline in the stock market, for example, the S&P 500. Now, the Vectorspace community actually used this event as an input to create a VXV dataset. This dataset highlighted the clear relationship between Evergrande and the S&P 500. Now, to savvy investors, there's nothing really special about this. News of a default that size is likely to affect the stock market. But now, let me ask you, What does Evergrande, a Chinese property developer, have to do with Kodiak Biosciences, a US biotech company? Any guesses? Well, it turns out that Kodiak Biosciences was funded by the Evergrande Foundation. If we take a look at the charts, we can see that Kodiak Bioscience stock has declined ever since the Evergrande announcement on 31st August. So, this is what Vectorspace does at its core. It shows you how different entities are connected under a specific context, without you having to dig through the data yourself. Unless you are already an expert in Evergrande, you would need to spend time gathering all the data manually. By the time you do this, the stock price may have already moved, meaning you lose out on precious alpha. Vectorspace cuts down on time spent doing this, augmenting human understanding. You can put in any context you like, whether that be NFTs, the metaverse, gaming, DeFi, or even the most recent event we're seeing in Eastern Europe. And it's not just limited to stocks. Vectorspace is able to process data from any industry. You can feed it legal documentation, or it can highlight compounds for scientists. Okay, so we went through the AI part, but where does blockchain come in? Blockchain in Vectorspace is used for data provenance, or in other words, knowing exactly where the data came from and how it was processed at each step. So for example, collecting data from PubMed will be registered on the VXV blockchain as a transaction. Then, processing and cleaning that data will be registered as more transactions. Then, let's say you want to see a dataset which shows the relationships based on the context of a current Eastern European situation, for example. This will also be registered on the blockchain as a transaction. By the end of it, you will have a chain of evidence which can be used to explain how you came to make a particular decision. But why would you need this? Well, this is especially important for large institutions as they make billion-dollar decisions every day based on data. They have to know that the datasets they're using to base their decisions are legit, and they have to be able to explain how they came to make the decisions. There are actually regulations around this, and I'll take you through an example shortly. So there you have it. Vectorspace makes decision-making faster by highlighting known and hidden relationships secured by evidence on the blockchain. Okay, cool. But what problems is Vectorspace solving, and for who? Well, let me introduce you to the world of hedge funds. You see, the biggest challenge for hedge funds today is generating alpha, or in other words, a return on an investment that is above what you would have got if you just put your money in a market index like the S&P 500. If there was no alpha, why would you ever leave your money with a hedge fund? You're better off just investing passively, right? And generating alpha today is only getting harder. This is because of several reasons, such as the rise of passive investing. It is much cheaper and has less perceived risk compared to paying for high management fees for a hedge fund. Also, a lot of the same people have access to the same information, meaning there's less alpha you can generate from having that information. And ever since the great financial crisis, hedge fund managers in general take less risks. This is why hedge funds today are turning more and more towards using AI and quant-based strategies. We can see that industry-wide, hedge funds which use quantitative-based strategies tend to outperform hedge funds which don't. The idea is that since everybody has access to the same information, whoever is able to analyze and use that information faster has a higher chance of generating alpha. This has given rise to a new field called alternative data, which is an umbrella term for any dataset that is published outside of the hedge fund. There are all kinds of alternative data today, and they include things like satellite imagery, social media sentiment, shipping trackers, or web data. Now, with the growing rise of alternative data, what makes Vectorspace datasets special? Well, there are still problems around using alternative data. The number one problem at the moment is poor data quality. You see, these hedge funds spend loads of money hiring smart machine learning engineers and spend millions on building proprietary algorithms to analyze that data. At the end of the day, they're going to base potentially billion-dollar decisions off that data. So, to minimize risks as much as possible, they have to be sure that the data is of the highest quality. This means they need to know that the data came from a trusted source, and they also have to know how it was processed at each step of the pipeline. This is where Vectorspace comes in. Remember, each and every change to the data is recorded as a transaction on the blockchain. On top of this, there are also legal implications around using AI in asset management. Although there are no laws explicitly restricting AI, there are legacy legal requirements. You see, for each trade, there needs to be an appointed, experienced investment professional who is accountable for that trade. That professional needs to be able to explain how they came to make a decision in the event of something going wrong. So Vectorspace gives these professionals a clear chain of evidence that they can follow and use to help explain decisions. And on a side note, because of this legal requirement, it is unlikely that AI will replace investment professionals. Rather, it will augment their abilities. The second biggest problem with using AI is the lack of data itself. Data could be outdated and not relevant to current events. Data could also contain bias in the way it was collected. For example, mobile phone data from a vendor whose install base is primarily from one demographic. So although data is abundant, a lot of it may be unusable unless it has been carefully curated. This is where Vectorspace comes in again. Vectorspace algorithms scan scientific literature from a variety of trusted sources. These trusted sources peer review and curate the literature that is published on their platform. These sources are also updated with thousands of new literature each day from the scientific community. Vectorspace scans these sources every minute of each day, which means Vectorspace algorithms and datasets are trained and updated in real time. And taking this further, let's say you don't trust these sources and you find a particular data point which doesn't make sense. You can always track the data back to the source and remove that source from your dataset. Finally, the third problem is the lack of data science talent in general. Vectorspace solves this by offering data pipeline services themselves. You don't actually have to use the data Vectorspace AI provides. You can simply feed Vectorspace AI your own data and it will output a dataset based on your own data. Now all this is well and good, but who is actually using it today? Vectorspace's target customers are large institutions. They have signed a memorandum of understanding with S&P Global and Morningstar and are actively collaborating with Imperial College London. So they have announced several impressive partnerships overall within finance and in the space biosciences industries. But let's take a look at it deeper. Who is actually using the VXV token? Now, because their customers are large institutions, we can assume that NDAs are in place to hide the fact they're using it. I was not able to find any direct connections or statements saying who and how VXV tokens are being used by these partners. The only thing I could find were media announcements just stating the fact that they were working together in some way. Whilst these announcements are awesome, they don't really tell us too much about VXV usage. Also, since Vectorspace is somewhat a new project, there is not much on-chain data available. From what we can see here, there is not much activity in terms of transaction volume outside of exchange listings. We know this by tracking listing dates and looking at volume on exchanges. Perhaps these listing dates coincided with a big internal project skewing the data, but there's no way to tell looking at the data currently available. When looking at age consumed, which just means how many old coins were moved, we can see that there are two outliers, which may coincide with CERN and Morningstar announcements, but it's still a bit of a long shot. These two outliers didn't seem to move the needle a whole lot on transaction volumes. From digging through Cajun Frank's wiki calls, I found that they have a lot of interest from financial institutions such as S&P Global. However, talks with these institutions have been put on hold. Vectorspace's current strategy is to collaborate on research within the space biosciences industry. For example, they work closely with Imperial College London, working on discovering life-extending proteins. Then, once these research collaborations are deemed successful, they plan to use it as a case study to build a more convincing argument for financial institutions to use Vectorspace. So, putting all this together, they are in talks with very large institutions, but they are still in the process of proving their tech and are not actually being used at the moment. Nevertheless, their list of partnerships are awesome, and we must wait and see what comes of it. In terms of competition, there are no direct competitors to Vectorspace. What makes Vectorspace special is that they're the only company to combine hidden relationships, natural language understanding with blockchain. No other company offers this, so they're pretty differentiated to the market. Let's take a look at some of their indirect competitors from the traditional space. So Vectorspace indirect competitors are basically traditional alternative data companies. Their three biggest competitors seem to be Bloomberg, Kenshu, and AlphaSense. Apparently Palantir is also a competitor, but I've read that they have actually closed their finance arm down. Anyway, all really established, and hedge funds likely trust these competitors to provide them with data. Now, the need for data provenance is crucial for the largest players, and interestingly, S&P Global seems to think so. They have recently acquired a Kenshu, now called Sky, and they have an MOU with Vectorspace. So could it be that S&P Global is looking to combine these technologies? In any case, it's going to be key for Vectorspace to really market the benefits of data provenance. It helps the big players de-risk and be able to fully audit the usage of their AI. It really is an enabler of AI usage. And overall, we know that quant-based hedge funds tend to overperform discretionary hedge funds. So, discretionary funds looking to get into AI could see VXV data provenance as an attractive solution to de-risk the process. Now let's get a sense of how the Vectorspace team will execute on their strategy. So the core management team are veteran software engineers and have been in the AI industry since 1994. They have worked together for roughly 18 years, and they actually developed their NLU tech at the Life Sciences Department of the Lawrence Berkeley National Laboratory. They actually have the patent for specific set of steps involved in processing raw data into a correlation matrix, which results in the dataset. The team continues to collaborate with heavyweights in the biosciences and machine learning space. It's safe to say the Vectorspace team knows what they're talking about when it comes to NLU. The team is fully aware of this, and they have actually attempted to use NLU in 2 previous startups. The team's first attempt was SeekPod, which was a search engine for finding playable audio and video across the internet. SeekPod was actually really successful and had 50 million monthly active users. However, large players in the music industry took note and sued SeekPod. Warner Music Group, along with Elektra Records and Rhino Records, filed a complaint alleging that it connected users to illegal copies of copyrighted music. Unfortunately, the lawsuit led to SeekPod filing for bankruptcy, and the IP at the time was acquired by Sony's Intertrust division. The second attempt was Mimvy, which was also a search engine company, but for mobile apps. Going through Cajun Frank's wiki calls, they apparently had to go public. This was because Mimvy was a post-2008 tech company. And from what I understand, after the crash, it was hard to survive without outside investment. So they had to go public. And to do this, Cajun Frank had to step down as CEO because of the previous lawsuit. The company had to be squeaky clean for it to go public. And from what I understand, things didn't turn out so well, and Mimvy has since changed the company name to Adaptive Media. So Cajun Frank and team are highly battle-hardened startup founders who have gone through it all. And I'm sure they're approaching Vectorspace differently with this well-earned experience. But at this point, only time will tell really. Now let's look at VXV's tokenomics, revenue model, and any extra factors which may affect VXV price. VXV is an ERC20 token, and the team didn't hold an ICO. They raised $700K privately through angel investors and minted 50 million VXV tokens on 4th August 2018. These tokens were initially distributed to the team, kept as company reserves, and some were pre-allocated to be used in the secondary market. Out of 50 million, 50% were initially allocated to the founding team. This is quite a large amount. However, it seems this has changed, and the current circulating supply is 39.7 million, with the remaining 10.24 million or so being in the team's wallets. This is roughly 20% of the total supply. 20% distributed through the whole team isn't too bad, as usually founders alone would usually take that amount in a traditional startup. Now, it's not entirely clear what they have used the company reserves for, but we can assume it was used to grow the capabilities of the company and incentivize use of their technology, perhaps for clients to demo with. The The founders' tokens were locked in a 4-year vesting period, so it will be 4th August 2022 where the founding team will be able to use their tokens. They mentioned they will be taking some profit off the table around a 4-digit VXV. So overall, Vectorspace runs very much like a pre-revenue stage startup. The team has full control over the token economics. They limit who gets to buy the tokens, and they're able to mint more tokens if they want to. VXV tokens essentially act as an API distribution key for VXV datasets. And to access Vectorspace services, you can either pay in fiat, VXV, BTC, or ETH, similar to a subscription model. 50% of the value of the subscription will be automatically exchanged for VXV on the secondary market with their in-house DEX. This VXV will be placed in their customers' wallets to be used for VXV datasets. The other 50% will be collected as revenue for Vectorspace. The amount the customer pays will be determined on what level of service they need. It is priced in fixed fiat prices for simplicity, and current costs are 99 cents per update, per dataset, per data source, per minute, per context. Then, when you use Vectorspace, those VXV tokens simply just sit in your wallet as an API key. They aren't consumed and they aren't burnt. They just sit in your wallet. You can then choose to do whatever you want with it. So you can see their revenue model is clearly targeting financial institutions, and the current prices are in a similar range to what these institutions pay for alternative datasets. With the added peace of mind of data provenance and additional hidden relationship NLU, Vectorspace's offering is actually quite attractive. So anyway, continuing on, you can then decide to either sell the VXV tokens when the price is right, or just continue to pay for your subscription. If you stop your subscription, you would still have access to the dataset, but it will not be updated. Overall, VXV tokens are utility tokens and are essentially fuel to use the Vectorspace datasets. And the more valuable the datasets are, the more clients will look to use Vectorspace, translating to greater demand for VXV. But what determines the value of Vectorspace datasets? There are several factors, but let's go through some of the ones that stand out. So, when creating a VXV dataset, the user has free reign on how that dataset is created and used. They can input whatever data they like to augment, they can set any context, and they can manipulate the output dataset in any way they like. This is awesome, but this also means users have to know how to extract value out of the dataset. So the value of VXV datasets is highly dependent on the experience of the user. And at the moment, while it is on an uptrend, expertise in NLU, data science, and data engineering is relatively low. Companies are still in the process of hiring this type of talent. Plus, once you actually have a valuable dataset, the value will eventually decay because we live in a highly competitive world that is constantly changing. You can't rely on the same algorithm or model to carry on delivering value forever. You need to constantly update it. This again relies on data engineering talent and ultimately the know-how of the decision makers. So we can say at the moment, more often than not, the value extracted from datasets will be low. But since AI and blockchain are essentially industries of the future, over time we can expect the average value extracted from datasets to be higher and higher due to more experienced and abundant talent. Another factor that makes VXV datasets valuable is the limited nature of VXV tokens. VXV tokens have a fixed total supply, which means as the supply goes down, access to VXV datasets goes down, which in turn amplifies the price of those VXV datasets. But there is also another very good reason for this mechanic. You see, the VXV token has a secondary reason for existing other than data provenance. In the business of investing, it is attractive for top-tier institutions that the alpha generating tools they're using can only be used by a limited number of competitors. If everyone has access to the same tools, then alpha would effectively be wiped away. So, by having a limited amount of VXV tokens, customers who take long-term positions in VXV are able to limit access to those datasets, helping them maintain an edge over their competitors. Interestingly, this is one project which does not want network effects. It doesn't benefit by having more people. It benefits by having large top-tier institutions taking advantage of it. Then, through economic forces, those institutions' competitors will pay top dollar to get access to it. Also, interestingly, scalability doesn't really play a role in the value of VXV. Their customers are large institutions, so even paying $1,000 in Ethereum gas fees doesn't matter a whole lot. Now, let's calculate the fair value per VXV token. I'm using a valuation framework from Professor Susan Athey at Stanford and Robert Mitchnick at BlackRock. It is quite a novel framework, so the valuation will be a very rough estimate based on a lot of assumptions. So don't take it too seriously. It is not financial advice. Anyway, I find this framework to be particularly useful when evaluating cryptos with little to no historical on-chain data, which is pretty much all cryptos except for Bitcoin and Ethereum. If you'd like to try it out, there's a link in the description below, and I suggest you read the actual paper to understand how it works. The calculator here is basically a dumbed down version, but something quick we can do to get an idea of value. So VXV was launched in 2018. However, the use of the underlying technology, NLU, and alternative data started in 2000. It's still very nascent and started to become more popular amongst hedge funds in 2015. Also, the notion of cryptocurrencies started to become more prominent in 2009 when Bitcoin was launched. So if we take the average of these, we get an average invention year of 2010. Now, generally, throughout history, new inventions take anywhere between 10 to 20 years to reach mainstream adoption. And when I say mainstream adoption, I don't just mean degens holding a token in a wallet. I mean actual usage of the token by the intended target customer. So in this case, use of VXV datasets by majority of hedge funds. Now, it may happen sooner or later. It's up to you. This is how I personally think about it. But if all goes well, we may potentially see VXV being adopted in the mainstream roughly 3 years from now. This is on the assumption that VXV hits all roadmap targets on time. It beats all competitors and crypto itself becomes widely accepted by governments. Hedge funds currently spend $3 billion annually on alternative data. Out of that, consumer patterns, expert networks, and web crawl data are the most popular. NLP is still quite novel here, so let's say out of that $3 billion, NLP captures 10%. Now out of that 10%, let's say VXV becomes the absolute leader in the field and captures 80% of the NLP market. Putting this all together, we get a current daily transaction volume of $240 million annually being spent on VXV datasets. We have to now cut that in half because Vectorspace spends 50% of their revenue on VXV buybacks. So now we get 120 million per year, which is 328k daily transaction volume. Now, use of alternative data is growing pretty quickly at an estimated compound annual growth rate of 40%. We get a future daily transaction volume of 900k daily. Now, the velocity is going to be pretty low. The reason being, once VXV is purchased, it's going to be sitting in wallets. So there's no real trading activity here. So let's give it a velocity of 0.5. Next, we have to assess the demand for VXV being a global store of value. There are a couple of requirements to being a good store of value, such as maintaining its value over a long period of time, effectively infinite demand and lifespan, and its value doesn't deteriorate in an economic crisis. Now, VXV is a brand new token being built by a small, albeit experienced team. There's no reason to think it will be around forever at this point. Its value is highly connected to the capability of its users being able to extract value from datasets, which has yet to be seen. But let's say people in the future are able to do this 100% of the time. This would mean it would have awesome demand. But in the case of an economic crisis, people generally look to take less risks, go slower and bunker down. VXV gives people the ability to do the opposite of this and create hypotheses and ideas faster, which may or may not work. It doesn't really give the certainty like how oil, gold, Bitcoin, or real estate does. If using VXV always led to some kind of growth 100% of the time, then it might be useful holding on to it during a crisis. But that is a big if. So putting all this together, VXV has an extremely low chance of being a global store of value. Next, we give it a discount rate of 8.5%, which just basically says in a systemic event, such as a war, the value of VXV is likely to go down. Now out pops a fair value of 3 cents per VXV token. I'm recording this at 9 PM on 9th March 2022, and the current value of VXV is $1.75. So, according to my calculation here, it is pretty overvalued. What do you guys think? Do you think I was being too harsh or pretty fair when doing this calculation? Just remember, I used a lot of assumptions and I also have my own biases, so don't be too disheartened looking at this valuation. It's just a good exercise for all of us to get some more ideas about VXV. I also didn't take into account all the scientific collaborations going forward. Now, let's summarize and go through VXV's strengths and weaknesses. The team has crazy good engineering expertise, and they're also battle-hardened through previous startups. They know what not to do, basically. The tech itself is pretty awesome. It can be general purpose and be applied to a wide range of fields. Their total addressable market can be huge, and the tech is patented. They have super close partnerships with the biggest space-related companies and laboratories, giving them a nice proving ground for their technology and nice contacts as well. They are in a fast-growing field at the intersection of finance, AI, and blockchain. The trend is on their side. They don't have any direct competitors at the moment, so they have first-mover advantage with respect to combining data provenance and NLP. Let's go through some of their weaknesses. So, their tech in theory is awesome, but the use case is still unproven. Using their technology is also pretty difficult. Not many people have expertise extracting value from NLP, NLU correlation matrices. They are in a market which is in kind of a weird limbo, and what I mean is that it is very niche at the moment, but in the future it could be the norm to use NLU. So I guess what I'm trying to say is using AI and blockchain is quite speculative, and using both together is very speculative. Regulations around use of AI and blockchain in investing can change, so they have to watch out for both of these. Although they have great engineering experience, it would be nice to see more sales and marketing expertise on the team. They are moving ahead with the assumption that proving their use case in space biosciences means that hedge funds will also start using it. Of course, it will get hedge funds interested and open doors, but the way hedge funds will use these datasets is going to be different to scientists. They have a whole set of different needs and levels of understanding to actually utilize the datasets in an ROI positive way. What I'm saying is, even with bulletproof case studies from the space biosciences industry, it's still going to be a challenge for hedge funds to use VXV. So overall, I would give this project a C+. It basically straddles 3 highly speculative fields with an unproven use case. But it has a lot of potential with trends on their side. First mover advantage alongside a strong product development team. I would change this rating to an A if one hedge fund was ROI positive today using VXV, but this has yet to be seen. That's it guys, thank you very much for watching. As always, if you enjoyed the video, hit the like button and subscribe. Leave any suggestions for future videos in the comments below, and also any questions you have, just drop them in the comments below. I respond to all comments, so yeah, looking forward to see what you guys type, and catch you guys next time.